Welcome, Mish. We are back. It's Geoff Bish, president of MarketGauge.com, and Mish Schneider, chief strategist of MarketGauge.com. And Mish, I'm going to take us back to where we started about 2 weeks ago to XRT. And just when we were talking before the show, you had a great explanation of how XRT retail should really help people kind of chill out right now with the volatility in the market. So if you could just start us there, that would be great.
Yes, and there's that, and also we really are consistently showing people a bunch of weekly charts because of the volatility right now. When you go to a weekly chart, you get a better perspective. And so looking at this XRT, what did we talk about 2 weeks ago? We talked about the golden cross, where you can see the 50-week has crossed above the 200-week, which really hasn't been the case for quite some time, number one. And number two is we talked about the giant consolidation, if you will, a channel and a high and wide channel, but a channel nonetheless where you see good bottoming formation around 70 and a lot of resistance around 80. So is it any great shock that at this point in time, we're sitting at around 75, which is smack dab in the middle? So the takeaway of this is not to necessarily freak out that we're going into some massive correction, because I'm starting to see stories like that scaring people to death, or that we're necessarily going to 8,000 like Ed Yardani says anytime soon either, because these are opinions based on whatever cycle work they like to use. We can be very logical and say all we're doing right now is consolidating in an extremely important sector, because as we continue closer to holidays, and especially on the jobs report and everything else, inflation numbers and war and weather, the consumer has to stay in the game. So the longer we consolidate, the better it is for whether it breaks out or breaks down. But for right now, we don't know that.
Yeah, this is definitely a very different looking chart than say the SPYs, which I'll pull up here, that have just gone straight up, and now a little bit of red, and volatility is popping already.
Right. And then because of the SPY chart, we want to guess that the breakout in something like XRT, which of course we know is granny of the family, will be to the upside. But again, that's an anticipation that we don't know for sure yet, because who knows what happens here with SPY. And, if you're looking at SPY, obviously you really want to see that sort of 560 level hold up as sort of a key area, because that's where it broke out from. We haven't even really fully retested it yet. And so if it breaks, maybe we start to get a little bit more cautious. But for now, all we're looking like is the leadership is the leadership, and the consumer is more like stuck in the middle.
Yeah. And today, every sector was down except for the one we talked about last week, which was XLE and energy. So we nailed that one. And let me go to Oxy, which is where it started.
Yeah.
And our conversation last week was all about this 200-week moving average, and your call that you were actually in it. So just walk us through what you're thinking with this now.
Well, I'm very, very happy with myself. So that's first thing. Mostly I'm happy with myself because I share what I think with you guys. So I've gotten some feedback from people who got in when I got in, and especially after they saw our podcast. So that's the first thing. The second thing is, this is a really good time. I mean, this is always the dilemma about, I shouldn't even call it a dilemma, but this is always the analysis that you have to do in any trade, is decide what are you doing with the trade. Now, okay, we're in the trade, depending on where you got in, what kind of position you put on is irrelevant. Wherever you are right now, you say, what are we going to do? So there's a couple of choices, and that's what we wanted to discuss, is just kind of review with you trade management. And we're not going to go deep into it because we have other things to cover, but at least give you a little bit of a synopsis of how I'm thinking when I'm looking at a trade like this. Number one is I do have to say, did I buy the bottom? If I bought the bottom, obviously I'm going to think of Warren Buffett, who has been accumulating. He owns about 29% of the stock right now. And that's pretty good company to be keeping. And I actually timed my way better than he did. So you think, well, if he thinks that the bottom was like $50 ago, if I got in now, if that's the bottom, what does that mean? That means I want to stay in the position, but that doesn't mean that I won't do anything. So the first thing, fundamental thing, is you don't want to turn a winner into a loser, because we're not Warren Buffett, right? So if you bought it, let's say at around 50 or 52, that's kind of where you would think now, no loss, stop. Second thing is, okay, well, I have some money in it. Do I need to take some profit? Even if I want to sit with it, do I have to have a full 100% position in there? So, I took a little bit of profit. We had a full position. We took a quarter off. But that's because I am doing money management. And so from a psychological standpoint, I felt that it would be better to have locked in some profit. So that's number one. Well, number one is the no loss stop. So clearly at this point, I have the no loss stop. I've taken a little profit. So what do you do from here? And this is where choices come. Geoff drew that beautiful horizontal line that we are now through. So if you wanted to play it a little tighter, you could say, well, gee, if it takes out that particular horizontal line and gets back down below that, that means the trade is not necessarily as good. You can either raise your stop, take more, or most likely you would want to say, where's my second profit target? And that's where the 50-week comes in. You would start thinking that as it gets closer, if it can take it out, maybe a second profit there, and then use that horizontal line as your stop that you've moved up. So it's really a personal choice, but the idea is to have some level of strategy and of course some level of an open mind, because who knows? I mean, this thing could gap up higher tomorrow and keep going, or it could gap lower. So that's why it's good to have a plan.
Yeah. I drew the horizontal line there because I imagine that people are going to be looking at that level and saying, well, why would you hold on to it when you're coming right into this resistance? And you actually broke the resistance. And as you pointed out, it could continue to go higher. So it's just when I'm in a situation like this, I draw the line there and I do a simple assessment of support becomes resistance, resistance becomes support. Now, while we're through the resistance in some way, if it's still good, then it should hold above that line. If it gets below that line by too much, then I've got to have a number at which I'm going to recognize that it didn't get through the resistance. But let the market do the talking. Don't just don't get out because you think it's not going to make it.
Right. And we, my God, how many times have we beat the drum of the advantage of having a no loss stop at the very least after you have 2-to-1, at least from ratio as far as where your initial stop was to your profit target. And the clear stop was under that 200-week moving average, which gives you at about a 2-to-1. So the very least you can do is at least go no loss. And then from a psychological standpoint, you could feel a lot more relaxed about making that decision based on what the price does from here.
Yeah, and your no loss could be right at or right below this pretty significant support level.
Right. For us right now, we have an average price of around 52. So that would be, for me, I would not want to be in the trade if it gets below 52 at this point.
Right. And that would be a great place to be out.
Mm-hmm.
All right. Awesome. So what's next on the docket for you?
Okay, well, the logic of Mish, right? So, I always like to be one step ahead, and I have been in this business for so long, and we've gone through many, many different scenarios where oil prices and energy prices start to go up, and eventually people start to think about alternative energy, not just solar energy. Obviously, there's been a lot of talk about nuclear energy, although I think we're far from there. And so I started to look at alternative energy. And again, my style is very much about finding things that look like they've exhausted to the downside and they're ready to make a move higher because they're basing out. And obviously we look for other evidence too, because we have those fabulous tools of looking at it versus the SPY in terms of performance with our leadership indicator. And then, of course, how it's doing with momentum and a real motion if we're looking at a divergence. And again, we're going to start with TAN from a weekly chart perspective because it's so interesting. And yeah, I'll give you a chance, Geoff, to blow that up. And also if you can sort of scroll out a little bit on that price chart so we can see it better. So, TAN is another one of these things. It just happens all the time. As soon as I start to hear more and more people poo-poo alternative energy and get all politicized about drill baby drill and all those other things. And yet we have hurricanes hitting us in some key regions. And then, of course, we have the Middle East war escalating with the possibility of oil disruption there and onward and onward. I know that the current administration just had a huge decision by the Supreme Court to allow regulations in place in certain areas of alternative energy. So I thought, okay, that's a good time to really look at this. Now, truth be told, I already have a position in TAN, but nonetheless, I was encouraged by this piece of news and what I was seeing now. So let's talk about it. So we've talked a lot about the 200 week. So here, what we have is the 50 week coming into play. That's the blue line. And we also have a beautiful double bottom, which Geoff just drew that lowest horizontal line here. We had a double bottom. Really, this is an ETF that has tested under 40 a couple of times, and it doesn't stay under 40. In fact, we've had lots of bounces from 40. So since we've had those bounces from 40, it has broken down under 40 and then comes right back. So what does that do? Go back to our trade management, gives us a really good stop. We get through all those lows, under those lows, obviously the trade's no good. But that's not what's happening. Instead, what we see happening is that it keeps bouncing away from that 50 week. But let's talk slope, Geoff. Look at that beautiful slope in the 50 week moving average. Notice that it's been in a declining slope for a really long time until the last week. Look at the slope. What's happening? It's neutralizing. And maybe, and I don't know if this is my imagination, we're seeing a slight slope up, right? So
we could go take a look at the 200 on the daily and see if that's sloped up.
Right. But before we do that, you wanted to show the real motion on these too, because the other exciting bit of news is that we're seeing, he has two different time frames there. Geoff, why don't you tell him about that?
Yeah. So this is a nice shortcut on the weekly chart. So the real motion is two different time frames if you're not familiar with real motion. So the top one here is the 200 versus the 50. So the idea is that lines up exactly with the 200 and the 50 moving averages in price up there. And then the bottom one is the 50 and the 10, which lines up with the 50 and the 10 here. So when they're doing something different, that's when you really want to have a heads up. And so what you can see here is on this 10 and 50 week, which is equivalent to essentially the 50 and the 200 day, we've got a big divergence. You've got the 10 week well above the 50 week, and at the same time, your 10 week below your 50 week. Now, the time this becomes really compelling is when you break the longer term moving average in that divergence. So that is your 50 week right here. So in short, all this energy of this divergence really gets exciting as soon as you break this moving average here, which, well, we are right on top of right now. So that's the exciting part about the real motion divergence.
And the other exciting part is this is exactly what we discuss in the book, right? Plant your money tree, because we talk about phases and we use the weekly chart. And so what is my favorite phase is the recovery or the recuperation phase, which means if we get that move over the 50-day moving average, we've not only seen the momentum giving us the heads up, But the confirmation in price is exciting, as Geoff just said, because it means we're actually going from a bearish phase into a recuperation phase, which is like smacks of opportunity.
Yeah, and one of the things that I always look for, and I point this out till I'm blue in the face in the Wednesday mentoring sessions, is when a trend looks like it's starting, the first thing I do is just the stupid comparison of prior lows. Have we taken out prior lows, or is it just walking up? And so you'd be surprised how long you can stay in a good trend with something that simple. So for example, when we broke down through the 200 here, kind of the same idea in reverse, waiting to break, it breaks, didn't go higher, didn't go higher. Here, I guess, yeah, you did go higher here. Didn't go higher, didn't go higher. Nope, 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 nope. Yup, and that's the bottom. So if this thing breaks, if you do nothing else, just keep an eye on that prior weekly low. It can be
Great.
really helpful in keeping your sanity.
Yeah. And one other thing that I just thought of as we're talking from a fundamental standpoint is let's not forget that First Solar, which is the heaviest weighted stock in this sector, is very much related to AI. And because the solar panels are being used in AI as well, which of course also brings into play silver, which we're not going to get into today. But it all sort of fits together. And so this is so underperforming. Let's say if you looked at NVIDIA today, it made such a nice move. So, you got that jump back into growth stocks, which makes sense because when we go kind of risk off, that's where people go. But that means to me that when you're starting to see something like TAN bottom out with the growth stocks doing better in even a risk-off environment, I'm not afraid to go into TAN because we have seen that sector outperform even when a market correction.
Yeah, and this is just NVIDIA. It really didn't look good today. It just didn't care that the market wasn't doing well, and then at the end of the day, when the market really got heavy, it acquiesced. But it did have a strong day until the end, and TAN was right there with it.
Yeah, and I'm not, by the way, just to disclaimer, I'm not saying that it's time to buy NVIDIA. I'm just saying that all of this fits together like such a great puzzle. So let's go. Okay, so now we're looking at the daily chart.
Yeah.
And so we saw the 50-week on the weekly chart. We're above the 50-day moving average, as you can see, but we have not taken out the 200-week moving average yet. And how much we love that 200-week moving average because we just showed you the example when we were talking about Occidental. So logically speaking, it's so interesting and of course makes sense since it's about the same time frame. But the 200-week really right now looks to me like we could actually get back over that at the same time we take out the 50-week. And now you got yourselves a nice little double sort of confirmation that this thing might be ready to take out and make a much bigger move. And again, if you're looking at real motion, it's showing strong there. And he doesn't have leadership up there, but I can tell you that TAN on the daily basis is also right now outperforming SPY. And you saw that SPY chart. So you have to go, this is such a much lower price than where SPY is. And yet it's outperforming. What does that mean?
Yeah, let me pull that up.
Back.
So as you were pointing out, the leadership here has turned up nicely on this rally here. So that means that it's outperforming the market as it's moving higher. And that which is saying something, considering that the market has gone out to new highs and this is not there at all. And then we'll just look to see the volume try and get up and over and start its own positive trend. All that coming as it breaks through, or if it breaks through, it's 200-day. It looks good.
Yeah, I love this that you and I are doing these podcasts together because I don't think there's anybody else that understands, as much as we both speak the same language. And when we both see the same thing, and I'm already in the position, I get so excited. I just want to add to it, which is exactly what I did with Occidental. And now I'm thinking, tomorrow with Tan, let's keep our eye on that.
Well, hold your horses, Missy, because even you would say it's got to break out first, right?
Absolutely, absolutely, absolutely. But yeah. All right. And by the way, this is all for education, right? We have to always say that this is not trading advice. This is education, because you can lose your money trading. Let's not forget that. So now let's move on to the next logical sequence in my brain. The other thing I love is not only finding things that are bottoming out, but finding things that everybody hates and realizing that they hate it for all the wrong reasons. I won't get too much into that, but I will say that one of the big moves that happened in the Chinese stock market has been the Chinese EVs. So Chinese EVs, man, they are eating our lunch in China with both alternative energy and EVs. And so, like, if you look at Boyd, BYD, that's a Chinese company that's done extraordinarily well. If you look at LI, no, that's Boyd Gaming. I don't think we get Boyd in America. It's Chinese stock. But LI is something we can trade in America. Look at that. That's made such a great move. And then also look at XPEG, XPEG, I think is the other, or XPEV, you got it. No, you actually came up XPEV. I'm sorry.
Yeah, I wasn't looking.
Yeah. There you go. That's another one. Look how this thing has just moved up. So, everybody's talking to me about, oh man, EVs are over. Nobody wants them. Everybody says they hate them. Yeah, 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 yeah. And I'm like, growing pains, right? First generation always has its biggest issues. But a lot of great things have happened in the EV market. And the biggest thing that's happened in the EV market is the prices come down, number one. And number two is, in the most recent stats, EV sales have actually beaten out gas guzzling cars. And people would look at me and say, no, you're wrong. But I know I'm not wrong because I've just seen the statistic. So that's a very long way of saying that gets me interested in American EVs. Now, of course, Tesla's Tesla. And the problem with Tesla right now is Tesla is more than just an EV car company. Tesla is also very much tied to Elon Musk, and he's got his own controversial stuff going on right now. But it looks good. I mean, it's come off the highs. You'll have a nice double top there from really July to now. So I don't know if I necessarily want to touch it unless A, it sold off more and held that 50-day moving average where we would have a better risk, or B, took out that double top. Right now, that's not the instrument that interests me. And notice today it's coming and starting to fail against the SPY. And the momentum is really, that's the volume got down there. The volume has trailed off too, which is actually probably means it's not as bearish as it looks. But let's take a look at two that I have been watching. I've been very vocal about. One is Rivian. Okay, so here, I mean, everything about this chart looks pretty bad. And when you first look at it, right, because it's in a bearish phase, and you can see that the 50 crossed below the 200 just recently. So we're back into a death cross. But what intrigues me about this particular instrument right now is, number one, yes, we've come off, but look at the lows that we had in June. And then even before June, from May into June, look at all that support we had around 10 in Rivian.
Yeah. So first you had it here, right? And then it dropped below. And then this is the 10 that you're talking about.
Right.
That's been solid.
Exactly. We tested it last week on Friday. Actually, I think we even broke 10, but we came back through to close right around it. And so today we had, can we spread it out a little bit so I can get some authority on what happened today? So today we had a little bit of a reversal. Was it a strong reversal? No, but it did close above the high of Friday. So it is a reversal pattern on the price according to, what we teach as far as glass bottoms and brick wall bottoms, etc. That's number one. On the leadership, we're nowhere. So obviously this thing is far from outperforming. It's still well underperforming the SPY. But the volume, let's go from volume, let's go to real motion. So if we look at the real motion here,
Hold on, I'm going to try and get both of them.
Okay.
There we go.
Okay, so if we
So
look
here's
at
the 200, 5,200 on the top, the one you focus on.
right, and so you can see there that the momentum, even with the new low that we made, did not go as low as the momentum did a few days ago, right? You can see what I'm talking about on the momentum.
Yeah. This here.
I mean, is it looking for reasons? Yeah, but it is something. But if you look at the real motion below that, the 50 and the 10, you actually got a little bit of a flip, like a mean reversion there. So you have a mean reversion, you have a potential reversal pattern, and you have this massive support at 10. And
Yeah, I'm gonna stop you right there, so because you might get far away. The other thing you have here is the bigger picture is that you got a divergence that started here, and while it never really played out here, this thing's only come down to basically hanging out around its 200. And the price action has gone way down under the 200. So it's not ideal, but if this holds 10 and this essentially holds 200, you're going to wind up with, and I don't have the Bollinger Bands on the price action, but you're going to wind up with a really interesting real motion pattern. If this comes back up through the Bollinger Bands, this will be back up through its Bollinger Bands. I'd be surprised if it's not beneath them, and all happening at this 10 level, like you're saying.
yeah, and also right after all the news has come out about Rivian that they were stopping production of a couple of things and they were cutting back. But cutting back sometimes is perceived as good, sometimes it's perceived as bad. But nonetheless, from a strictly technical standpoint, Rivian is a company that interests me, and I see more and more of them from a consumer instinct in the street here in Santa Fe. I mean, Tesla's still like the predominant EV that I see, but I see quite a few Rivian trucks, and I know they're going into the sedan space. So let's look at one more EV since we're on the subject, and let's look at Lucid, which I don't know if I've never seen a Lucid in person. Keith did, and came home to tell me what a gorgeous looking car it is. So here's the chart. So I've been watching it. And again, interesting, right? So here in the real motion, you've got that same sort of mean reversion on the lower one. You never broke the Bollinger Band, but look what's happening on the 50 there in the real motion on the second in the middle chart.
Yeah. This is what you really want to see. This is it's been diverging since here. It finally broke the 200. You got exactly what you expect when you've got a divergence in real motion, an explosive move, and it stayed in a divergence, and you just pulled back to the 200. I mean, the only thing better would be if it held the 50. But
exactly. But meanwhile, it's only in a caution phase. It went into a bullish phase because you had that golden cross in late August, and we've just been dancing between the 50 and the 200. So once all that clears, especially if we can get the momentum back over the 50, and that trend line that Geoff put in is really nice. So you're talking about 350-ish, but such a low risk. And this is a $3.50 stock. Now, some people will say, don't buy anything under $5. It's just not worth it. But nonetheless, when you have the chart looks as good as this, this is the kind of thing where I joke with some of my followers and say, buy a few shares for your grandkids and put it away because you don't have a lot of downside. And if this company ever catches fire with its good looking cars, and if you don't know what they look like, go have a look. Who knows? Who knows where this can go in the future?
yeah, this is a really interesting looking base. Very, very cool. So before I let you get away from this chart, because this one is really interesting. Where over 350, close over 350, trade the phase change over the 50.
Mm-hmm.
Would you put your
I want
stop?
to see probably a couple of closes. I mean, if you really want to be a little bit more conservative, maybe you take that last swing high that it had right there
Yeah,
and
that's
say, okay, I'll
370.
wait for 375. I mean, it's 25 cents. So
Yeah, and that's actually I'm a big advocate of looking
Nothing
left.
makes a
If you
home
look
feel as
left here,
comfortable and
that
stylish as
number
the
really
perfect
lines
rug.
up
Here are 4
with
simple
some
steps to help you
interesting
find the right size rug
levels.
for your home.
mhm.
Start by measuring your
Okay.
space to
Right?
understand
Lines
how
up
a rug
here,
will fit with your
lines
furniture.
up here, lines
Simply
up
do this by measuring
here.
the length and width of your
So
room.
yeah, that's
You want to
definitely
choose a
a
rug that is at least a few feet smaller than the
significant
space
pivot
where it
point
will
there.
be used.
Right. So we've given you a
Yep.
lot to think about in this podcast. I mean, you've got tan, you've got what to do with Occidental, you've got XRT as a good way to manage yourself in this volatile macro. And you've got a couple of EVs. You put that all together, I'd say we did a very good job of using a rule-based strategy along with some fundamentals to give our folks a lot to think about.
Yeah, and actually, I wasn't paying attention to your ex-Pev Chinese guy. What was it?
XPEV.
XP. Oh, XPEV.
XPEV, yeah.
Yeah, I mean, before this, we said let's not really focus on China unless we really have some actionable trade setups. And most of the stuff I see over on the China front are just rocket ships, and there's not much to trade off of. But this consolidation right here,
Mm-hmm.
that's a tradable pattern. That's pretty interesting.
Yeah. And you've got a nice risk right underneath that consolidation if you wanted to do it from a more active standpoint.
Exactly.
And look at your 50 is approaching your 200. Now, the golden cross is not necessarily as interesting to me when the price is so far away, but nonetheless, it's just something else to know.
Right, right. All right. Yeah. All right. Well, we definitely covered a lot here, and thank you.
Thank you. And thank everybody for watching.
All right. And bye for now.
Bye for now.